Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you how to make smarter trades. In today's video, I want to go over beta weighting your portfolio and basically looking at a benchmark index and how it is going to affect your overall portfolio. It's a concept that we talk about often here at Option Alpha, and I think it's really important to have an understanding of where your overall portfolio sits, not one specific position, but the overall portfolio in relation to a benchmark index. So in this case, what I usually use, and I always say, pick one benchmark index and use that basically going forward. I think the best one that you could possibly use is SPY. If you want to use something different, you can use DIA or IWM, QQQ, whatever you want to use as your benchmark index. Just pick one thing and use it going forward so that you're always looking at one benchmark index. Now, the whole idea here is to look at your portfolio and ask yourself basically like, hey, how is my portfolio balanced according to some benchmark? Am I getting too bearish overall on my positions, too bullish? Am I just neutral? Where does that exactly stand? And so what we're looking for is some sort of range that the market can trade in, and our overall portfolio is going to make money. So that's really what we're after. We're after some sort of range to say, hey, look, as long as the market trades between here and here, the effect on my portfolio is I'm still going to make money. I may lose on position A, but I'll win on position B, C, and D, or whatever the case is, right? And so that's why we use portfolio beta weighting. Now inside thinkorswim, they make it very easy to do. You go inside of the Analyze tab here and then under the risk profile. And what you're going to do is you're going to type in the beta symbol. Now, the only thing that you're going to do here different is once you type in the symbol, you're going to go down to this box down here, which says portfolio beta weighting. It will initially say single symbol. So if I go in here and I type in something and I don't see anything, that's because I have a single symbol in here, which means I'm just looking at my SPY position. When I want to beta weight my portfolio, I'm going to go down to beta weighting for the portfolio, and that's going to now bring up, hey, what do you want to benchmark everything against? What's the beta symbol that you want to use? In this case, it's SPY. Now you can see I've got this new chart here, even though I don't have a position in SPY, because basically what it's doing is it's creating a payoff diagram based on all my positions and how they might look if they were one big SPY position. So the impact of everything and their relative movement to the overall market. Now in this case, what we see here is that the market is trading right here at this dotted line in the middle, which is 233.28, and it's moving today. It's down a little bit today. But our portfolio at expiration, which is this green line here, looks like it's a pretty balanced. I mean, it's actually pretty balanced. I'm doing this live time, just kind of however it is, but pretty balanced as far as how the distribution is. We're not too far off center at all. If anything, we could be a little bit bullish in tilt. And so this is the way I describe this, just so you guys know. If my portfolio right now, the way that I would describe it is I'm a little bit bullish in my overall tilt. And what that means is that I need the market to go higher to be perfectly, absolutely delta neutral and center, right? So that's why I am bullish, or my portfolio is tilted bullish. So how do you counteract that? Well, you either add new bearish positions, right, to kind of give yourself more exposure on the bottom side of your payoff diagram, start to shift this payoff diagram to the left, right? Or you start removing some of your bullish positions that you have already. So whatever you need to do, add more bearish, start removing some of the positions that you already existingly have. But what you're trying to do is you're basically trying to shift this payoff diagram, if you are, a little bit to the left, right? So adding more neutral to bearish positions, right? And that kind of helps give you some more neutral or balanced exposure. Let's say that my portfolio center was here. So let's say the market was trading up around 243 or so. In that case, I would be decisively bearish in tilt, meaning that if the market were to go down significantly, that would be the best thing for my overall portfolio. So whether you think the market's high or not, or think it's going to go down or not, what your portfolio is structured to do at that moment is make the most amount of money if the market were to go down. So you don't need any more bearish positions, right? If the market goes down, you're already making money. What you need is you need more exposure on the top side, right? Because if the market goes up or continues to go up, then you start losing more and more money. So you need, at that point, more bullish positions in your portfolio. So that's really how you have to look at it. Again, ask yourself, where do I make the most amount of money if the market goes down or up? And then ask yourself, okay, what do I need so that I'm more balanced, right? In this case, if the market's right here, right? And if our portfolio graph looks like this, if the market was to trade that much higher, we would ideally like to have the market portfolio curve be more of a bell-shaped pattern, right? So what do we need here? We need less bearish positions, and we need more bullish exposure to kind of shift and move this payoff diagram a little bit higher. This is what people often don't look at. They never, kind of look at this overall structure here, which is really, really important. So the way that our portfolio is set up right now, again, I'm just resetting the price slices. We basically can make money to all the way down to around 226, 225 or so, and all the way up to about 246. So if I go back to my SPY position here, 226, 225 is about here, and about 246 or so is right up here. So really, this is our payoff window here for the next month on SPY. As long as SPY trades anywhere between this range, we should make money this month on all of our positions. Now, again, we might lose on some and win on the others, but I don't care what the overall makeup is as long as our overall portfolio makes money this month. And that's what we're really concerned about. So as the market moves, we will continue to adjust our positions so that we move either down or up with the market, right? And this is this whole concept of just laddering and entering lots of small positions because you can move and shift the payoff diagram lower. Another thing that you can do here with portfolio analysis is you can simulate new trades being added to the overall portfolio or existing trades being removed. So down here below, you can see it right now. I'm showing all. I don't have any simulation. So once I delete simulations or say hide simulations, you see nothing changed. This is my actual portfolio. But if you wanted to, let's say, just hide all of your positions and simulate, a new portfolio that you're building, you could do that. What I like to do is I like to show all, and I like to add in existing positions that maybe we're looking at, something that might kind of skew the portfolio or affect the portfolio. So I'm just going to add something in here really quick just to show you guys how that impact would be. So like, let's say we're adding a new position in XLV, and it doesn't really matter. I'm just kind of showing you what that would look like. I don't know. We'd add a straddle or something in here, right? So I'm just doing something in here so we can see what that would be like. So we're going to add this position in here, and you can see now it's down here under XLV. It's a simulated trade down here. We'll just make it really impactful. Not that we would do 10 contracts, but I just want to show you the impact that's going to have. When we go back to SPY, now you can see what kind of impact that has on our payoff diagram. It looks totally different now with the input. So if I just toggle this on and off, you can see how that impacts the portfolio curve when we're just beta weighting it and adding simulated trades. So this is a great little feature inside thinkorswim, because what you should do is go in here and start adjusting and adding positions, right? Start removing positions that you might take off, and then ask yourself, how does that affect the portfolio? So I'm going to delete this for a second here, but let's say that we had a couple positions in XLV and USO that were likely going to come off this week. Okay, great. So now we take those positions off, and how do they affect the portfolio, right? So once we take them off, you can see it doesn't really affect the portfolio too much to remove those positions. Maybe if we also took off our OIH and our GDX and FXE, right? Now we're starting to really shift the payoff diagram a little bit more. So that might, either lead us to leaving those on for a little bit longer or replacing them with something else, right? So there's a lot you can do in here. I mean, I don't want to cover too much in this video because obviously it's going to depend on your specific situation, but the whole idea here is you want to try to get the curve as neutral as possible or be working towards that direction, right? It's never always going to work out, but at least if you have a general idea of where your portfolio sits relative to perfectly neutral, then that'll give you an idea of what positions you might need to add today, right? Because you should be adding positions maybe on average once a day, and so you can always add new positions that fit your overall portfolio, which is going to be really important so that you always remain neutral, always remain balanced. No matter where the market moves, you end up building a portfolio that could make some money. So thank you guys again so much for watching this video. Hopefully it helped out. If you have any comments or feedback on portfolio beta weighting, please ask them in the comment section right below this video. If you loved it, thought it was helpful in any way, please consider sharing it online. Help spread the word about what we're trying to do here at Option Alpha. And until next time, happy trading.